Okay, good morning, everyone. And once again, I want to take this opportunity to welcome you and thank you so much for joining our today's webinar. Today's webinar is a very crucial one because we'll be talking about something that is very mandatory and quite informative, and something that will also help our businesses or even our schools in terms of operation and the normal management of the school. So in the recent notice that was issued by Kenya Revenue Authority on matters to do with tax changes and registration or ETIMS registration for all persons carrying business in Kenya that was effected on 1st September 2023, there was an additional to it that all corporate income tax deduction will be granted only for ETIM supported invoice effective 1st January 2024. And we saw it as a mandatory way of informing all our customers that these are the changes that will be happening. And some of these changes carry a risk of non-compliance around it, meaning that there's a possible loss of business opportunity if you're not compliant come January 2024. Therefore, we have partnered with each bank tax and business advisory to just let you know and inform you of what is required in as far as Finance Act 2023 is concerned, and also what is required in as far as ETIMS registration for all persons with businesses. And when we talk about businesses, we also categorize schools under businesses or even SME. And also, how else can we mitigate such kind of risk that comes with non-compliance of the same? So with that brief intro or just a brief preamble, I would like to take this opportunity to now hand over to our tax and business advisory, that is each bank, who will be taking us through Finance Act 2023 and common tax risks that come with it, and what are we supposed to do as school owners or school directors to ensure that we are compliant to the new mandatory or even regulation that comes with matters to do with ETIMS and other tax mandatory for schools and stock businesses. So without any further ado, I want to take this opportunity to welcome Mr. Robert Wariru, FCPAK, if I'm not wrong, who will take us through our session for today for 1 hour. And I'll want to let you know, in line with data protection, is that this webinar is being recorded, and the same webinar will be shared in some of our social media pages, including YouTube. So just to let you know that the webinar is being recorded, and it will be shared on our social media pages, including YouTube. Therefore, I would like to also to just take this opportunity once again to welcome Robert Wariru to carry on with today's webinar. Karibu sana, Robert.
Thank you very much, Betty, and just confirm that you can hear me.
Yes, we can hear you loud and
excellent
clear. Yeah.
Excellent. Now, I just wanted to switch on my video very briefly so that our participants can see who is talking, but I realize that I'm not able to do that. So perhaps if somebody from the technical side can do that for me, that would be good. But good morning, ladies and gentlemen. It is a pleasure to be with you this morning. We are very, very happy to partner with Ed Partners and just walk you through the recent developments from a tax perspective. I know there's been so many changes that even for us as professionals who were in this space, we are finding it difficult to keep up with that. And that's the reason why we thought that it's important to just highlight the recent changes, the key ones that you need to be looking out for, like Betty said, and then some of the tax risks that we have seen. Now, I'll just run through, I've got a couple of slides. I'll run through this, and then perhaps we can have a question and answer session at the end of it all. And then should any of you have any specific questions that you'd want to sort of ask, outside of this forum, then we'll also share our contacts so that you can reach out to us. Now, let's just quickly start with, when you talk about the Finance Act, it's important for us to understand the process that goes behind coming up with a Finance Act, and that's what I wanted us to start with, and that is, as you can see on your screen, is provided for under the Public Finance Management Act 2012. And what this act provides is that the government must prepare budget estimates, and that's under Section 37 of that Public Finance Management Act. So you prepare estimates of revenue and expenses. And then once you do that, you draft a bill, government drafts a bill to implement that national budget. And you know, one of the key things about a national budget is that government starts with how much do you want to spend, then where are we going to get the money from? And this is a problem that you are seeing currently, because we are already saying that we want to spend 3.9 trillion for the next financial year, which is July 2024 to June 2025, but we don't know where we're going to get that money from. So that's the national budget. Once you draft those bills, then the government is required to put in the finance bill, and this is the one that says how are you going to raise the revenues. So that is required by 30th of April every year. So for 30th of April 2024, we can expect that we shall have a finance bill which will set out the taxation raising measures. And then once that bill is presented, it's debated in Parliament, there is public participation, and then under Section 39A of the Public Finance Management Act, by 30th of June, that bill must be passed into an act of Parliament, so that come 1st of July, government is able to appropriate funds, or is able to pay for the budget as the government starts. So I was just putting out my video there so that you can see who is talking to you, but allow me to just switch it off for purposes of bandwidth maintenance, so that we have a good conversation. But thank you very much. Now, as you're probably aware, there was a huge issue with the Finance Act or Finance Bill 2023, with Okiya Omtata and others going to court and saying it is unconstitutional and so on and so forth. And as after a lot of back and forth, the High Court had the case. We were actually expecting the decision from the High Court today, but it was postponed to 28th of November. So on 28th of November, we expect a decision of the High Court. My view is that the court will simply say that the law was okay, particularly because some of these provisions have been implemented, and we'll be going through some of those provisions. They've already been implemented, so it makes it very difficult for KRA to start refunding any money to all of us as taxpayers. Now, what are some of the changes? Having understood the process behind the Finance Act, what are some of the key changes that we can talk about? The first one that perhaps would be of interest to our audience is that when you pay somebody a mileage reimbursement, that mileage is not a taxable benefit. How does this arise? It arises where you, for example, send a member of staff on an official errand, perhaps go and buy uniforms, or go and buy books, or go and buy whatever it is, and they use their personal vehicle, and you reimburse them that mileage. Because you are recognizing that they have incurred an expense that they need to be compensated for. For as long as you reimburse that mileage based on AA rates, then that is not a taxable benefit. And I think that's an important one for people who are traveling a lot. So that, for as long as you're paying based on AA rates, that is not a taxable benefit on the recipient. For example, the bazaar has gone to the bank to get some money, or the accountant has gone to the bank to get some money, and they have used their vehicle. You reimburse them. That is not a taxable benefit. Then this is just one useful to know is that club subscriptions, when you're a member of a club, you are either taxed on it as an employee, or your employer is taxed on it. Sorry, there's a mistake there. It's an employee or employer, and that's effective 1st January 2024. As it stands today, both the employee and the employer are taxed on that. So that's an important one. Then now, the one that perhaps would start now making sense for our audience is turnover tax, TOT. Now, just briefly, turnover tax came into place in 2007. And the idea here was, let us make an easy tax regime so that you don't have to do a tax computation. You just say, these are my sales, and then I take a percentage of those sales and I pay that as my tax. It used to be 3% when it came into place in 2007. And the threshold was up to 5 million. But during COVID, that threshold was revised to between 1 million shillings and 50 million. But in the Finance Act 2023, that band or threshold has been reduced to 25 million, meaning if your total sales are 26 million, you're no longer within the turnover tax threshold, and you have to do your income tax computation, meaning your income minus expenses, then you pay the tax. However, if your turnover is 24 million, then you can actually pay the turnover tax, which is now 3%. During COVID, it was 1%. Now it's been increased to 3%. Now, an important thing to note is that yesterday, the government, the KRA published the draft turnover tax rules, and essentially just outlining what taxpayers need to comply with in terms of the filing requirements, which kind of businesses are covered, and so on and so forth. So it's something that we're happy to share with Ed Partners, the draft rules, so that you can all see them and participate in them in terms of giving your feedback. So that happened yesterday. Then the other key change came in effective 1st July 2023, and that is that when you have made a payment which is subject to withholding tax. So, for example, you are constructing a school block and you're using a contractor. When you pay that contractor, you are required to withhold tax between 3 and 5%, depending on what you're paying for. So today is 24th of February of November. If you are to pay the contractor today, then under the law, you've got 5 working days to remit that money to Kenya Revenue Authority. In other words, by next week, Thursday, you should have paid that money to KRA. If you do not, then there's a penalty. And that is the withholding tax regime that we're talking about. And that 5 working days also applies to withholding VAT, because some of you may have been appointed to be withholding VAT agents by the commissioner. Again, if you deduct, then you've got 5 working days. Now, there's a real challenge in terms of administratively, because, for example, when does the 5 working days start counting? Is it today when you make the payment, or is it Monday, the day after you make the payment? Do Saturdays count, and so on and so forth? So our advice is count 5 working days from the date that you pay, because that's what KRA is counting, and make that payment. Because if you do not, then there are significant penalties and interest, which we shall be coming to in a minute. Some of you may be paying people to promote or market your institutions, and somebody gives you an invoice of say 20,000, let's say 30,000 for doing that. That service, when you pay for it, there's 5% withholding tax that you're supposed to deduct. So just be careful about that, because if you do not deduct it, then Kenya Revenue Authority will come and collect the tax as if it was from you and not the person who you've engaged. For those of you who are planning to retire and want to put up a fund, post-medical retirement fund, there is a relief, which is a good thing. So if you contribute, let's say you pay 10,000 shillings per month towards your post-retirement medical fund, you get 15% relief, or you against your tax liability. So it's almost like a personal relief. So that's a good one, and it's effective 1st January 2024. Now, Betty talked about the e-teams and the teams invoices, and allow me to spend a bit of time on this one, because this is such a huge issue. Now, you've all had government talking about we want to expand the tax base. Basically, we want to expand the number of taxpayers in this country. And part of that is because the people who've been paying taxes, by and large, are those in the formal sector, people who are employed, like, for example, your teachers and your staff. Because they are on payroll, they have to pay tax. So there are people who've not been paying taxes, and this is what gave rise to the e-teams compliance drive. Essentially, what the government is saying is, anybody who runs a business, you must issue an invoice which is tax invoice management system compliant. That's what TIMS means, tax invoice management system. In other words, when you issue that invoice using this device that KRA has given you, or the program that KRA has given you, assuming that you don't have the device, then KRA is immediately able to see that invoice. So, for example, let's say I just take a school as just one school as an example. Let's assume that I'm in Parklands Baptist school. and they give me an invoice, immediately they give me that invoice, KRA will be able to see that they have given Robert that invoice. Why? Because KRA is able to trace that invoice on their team's platform. Now, for me to be able to take a deduction of when I'm computing my income tax liability, let's assume, let's take one of you guys who's running a school. Of course, you're running it as a business. At the end of the day, you're trying to make a profit. Then you're cooking for your students. So there's somebody who needs to, who has brought you firewood, for example, or has brought you cabbage for purposes of cooking. Now, because remember, you're running a business, you say, this is my income, these are my expenses, I've paid my staff, I've paid electricity, etc, etc. For you to take a deduction of the cabbage or the firewood as an expense, you have to have that expense supported by a team's compliant invoice. In other words, if the farmer or whoever is selling you the firewood or the cabbage does not give you a team's invoice, as far as KRA is concerned, that is not an expense. So we will not consider it when you're determining your taxable income. So this is a major issue. And we're asking our clients, and including you, to ensure that your expenses are supported by teams compliant invoices so that you can be able to take an expense. So whether you're talking about your contractor who is building your laboratory, who is building your dormitory, who is building your classroom, you're talking about the mechanic who is repairing your motor vehicle or your school bus, you're talking about the consultant who is doing your sales and promotion marketing, all those people have to give you e-teams compliant invoices, and that is effective. That is critical for the period starting from 1st January 2024, because if you do not do that, then that is not an expense for tax purposes. Yeah. Then the last one there is when you've got small tools and implements, some of you may have slashers, mops, and stuff like that. So you are allowed to take a full deduction in the year of income that you incur. So, for example, if you buy slashers for slashing the grass or something of the sort in the school, all that you can take an 100% deduction. However, that means that that slasher or that mop or that whichever it is you're buying, whatever it is you're buying, plates and all those things for your students, they have to be supported by an e-teams compliant invoice. That's a critical thing there. Then the extent that you have you're running a school from maybe a rented premises, just be aware that the commissioner may appoint you to be withholding rental income tax, because again, they realize that most people who own houses or properties are not paying tax, so they give the commissioner the power to appoint an agent. So in other words, you may be appointed to be an agent for purposes of collecting that tax on behalf of the commissioner. Then the one that has surely hit most people is this new POI bans. And for the longest time, since actually 1974, when the Income Tax Act was put in place, the tax bands had been going down, and it started off at about 65% tax in 1974, but coming to around 1990, the rate came down to 30%, the highest rate. However, last year or this year, we have seen the rates now starting to climb again, so that the highest tax bracket is 35% for people who are earning 800,000 and above. This would be important for perhaps directors and owners of schools, particularly where the school is not registered as a company, which means that you are running it in your own name, and therefore you have to account for the tax in your own name. So that will be income tax, personal income tax. So if you get a profit of, say, $1 million, then for sure you're going to be paying 35% tax on the amounts above 800,000. So that's important for purposes of the year 2023. Then the next one is the affordable housing levy, which you have been paying for your employees. So again, that is due on the it's due. It's actually due 9 days after the payroll. So we normally tell our clients, since it's a payroll tax, just pay it together with POE. And this one is levied on the gross pay of the employee. So it's critical to understand that if you're going to pay a bonus to your employees, the bonus is not subject to affordable housing levy. However, normal allowances and normal pay would be subject to affordable housing levy. And as an employer, you match the 1.5%. Then the last one on your screen there is the Social Health Insurance Act. We thought this one is important. It didn't come in with the Finance Act, but we thought this is important because you probably have seen the legal notice dated yesterday, no, the day before yesterday, giving the effective date of this act as yesterday. Sorry, as Wednesday, 22nd November. So the act is now in force without a doubt. And we expect that because it's coming to replace the National Hospital Insurance Fund, so we expect that shortly we'll have regulations that we'll all be contributing to. There are a lot of issues around this act because, for example, it talks about contribution by a household. But if you listen to what the president has been saying, what the health cabinet secretary has been saying, it's not clear whether it's a household or whether it's everybody. In fact, if you listen to the president, it's like he's saying everybody will have to be paying. So it doesn't matter whether you and your wife are teachers in the same school, and therefore one household, or you and your husband for that matter, one household. It looks like each of you will have to be paying the contribution. And now the big question a lot of people are asking is, what is that contribution? If you listen to the CS Health, she said that it's 2.75%, but it will be capped at 5,000. However, if you listen to the president, there's not going to be a cap. So if you earn, say, for example, $1 million, you can be sure you'll be paying 27,500. From our interactions with our contacts, one, we expect those regulations to come out next week. Two, we expect there not to be a cap. In other words, if you're earning $1 million, you'll pay 27,500 shillings per month. So that's something for all of us to be prepared for. And it covers, by the way, everybody who is an employee and everybody who is in business. So it doesn't matter whether you're employed, even if you're in business, you will still have to pay an amount as social health insurance contributions. And of course, the big kicker here is that under the law, you cannot access government services. If you wanted to renew your driving license, for example, you'll need to go to NTSA or eCitizen. To the extent that you're not up to date with your contributions, then you cannot even do some of those things. You can't apply for a passport, for example, and so on and so forth. So it's quite important to ensure that you're complying with that. Well, allow me not to dwell too much on this one, other than just to say that the key change here is we've seen investors coming in to invest in some of these schools because of the opportunities and so on and so forth. So where you've got non-resident investors, meaning people who are from outside Kenya, and we've seen this with some of the schools, particularly higher end schools, there will be some tax obligations around that. So it's important just to understand that there would be tax implications on some this kind of transfers, and it's good for you to get advice around that. Perhaps the one which is important for you is the last one, which is that you may have a school, a property, and you want to amalgamate, or you want to bring it together, and you do that, and you can get a capital gains tax exemption. However, if you want to do that, the entities that are involved in this transaction must have existed for at least 2 years. So in other words, you can't just set up an entity today and then tomorrow you want to do this tax-free reorganization. That is no longer permitted in law. So that's the critical importance around capital gains tax. Now, what's important? This one has got a lot of details, and Betty, we're happy to to provide this slide to the participants for their review, or in case they have got any questions, we are happy to do that after the session. But the one that I want to focus on there is the advanced tax for vans, pickups, lorries, and saloons and buses. The critical thing to note there is that previously you used to pay 60 shillings per passenger per month, or 2,400 shillings per annum as the advanced tax. Now that has increased to 100 shillings per passenger per month, or 5,000 shillings per annum, essentially doubled if you look at 5,000 shillings and 2,400. So what we are saying is that for all of you who own school buses, for all of you who own school vans or school pickups or school lorries, you must pay this. And if you do not pay it, then there's a penalty. There's a payment penalty for late payment. The good news, though, is that this is an advance tax. It goes to reduce your final tax liability at the end of the year. So I think it's useful to just make sure that you make that payment on time, and usually it will be by the end of February of every calendar year, so that you're not late on that. Now, those are the income tax changes. Let's quickly look at the VAT changes and what you should be expecting. I think generally we all agree that the VAT has, fuel has become very expensive because VAT moved from 8% to 16%. And there's a move. If you look at the draft medium-term revenue strategy, MTRS, they have proposed to increase the VAT rate to somewhere between 18 and 20%. So again, for your planning purposes, just have that in mind, that VAT rate from around June next year may be increased anywhere between 18 to 20%. And then for those of you who maybe cook with LPG gas, you may have noticed that it's become slightly cheaper because the VAT was now taken to 0% from 8%, which is a good thing. Insurance compensation, again, this one may not impact you guys too much because you are an educational institution or your educational institutions, so you don't even claim input VAT. However, the reason why we've included that one there is because there is a move again in the medium-term revenue strategy. There's a move to include VAT on non-core education services or curricular activities, extracurricular activities, meaning things like music and swimming and those kind of things. Those ones may be subject to VAT, so just watch out on that one. Some of you may be importing services from Amazon or procuring things from Amazon and some of these online services. Just know that going forward, you will be seeing VAT on your invoices because those service providers, Amazon, Google, and all those others, they are required to charge you VAT. And so that's the reason why you'll be seeing VAT on your invoices. And then for those of you who are VAT registered, then you can maintain records anywhere in the world. It doesn't have to be in Kenya, which is a good thing. Again, this one has got a lot of detail, but the only one that I wanted us to focus on is the supply of maize flour. And the key issue here was that there was no change in the VAT status of maize flour, because previously what we had was that it was in one provision it was exempt, VAT exempt, and another one it was VAT zero rate. So it was always very confusing whether you should charge VAT at 0% or it should be exempted. But now the law was clarified that it should be VAT zero rated, which is quite good. I guess the other one that I just wanted to slightly focus on is the last two. You can see the input for raw materials for pharmaceutical manufacturers and pest control product manufacturers. Previously it was zero, it has been retained at zero. However, if you look at the finance bill, they had proposed to exempt it. And this is why we think that perhaps as an association of investors or school administrators, it's good for you to participate in the public participation when the finance bill is drafted. Why? Because then you can come and explain your position and get the government to actually listen to you. Because like this one, you can see it had been proposed to be exempted, but government listened and retained it at 0%. So that's really just the key issue for you there. Now, there's something called Tax Procedures Act, and this is the act that guides all the procedures to do with tax issues in this country. So it has consolidated all the procedures that you need to comply with when you're dealing with Revenue Authority and when you're filing your tax returns. So there were some changes. The first one and the most important one that we'd like to bring to your attention is the amnesty on any unpaid principal tax. Now, how this works is that if you've got any principal tax that was due to government by 31st December 2022, then you can apply for an amnesty, and provided you pay that unpaid principal tax by 30th of June 2024, then they waive your penalties and interest. In other words, say one of you has, or some of you have not filed their tax returns for 2022, then and there's a tax that is due, you engage Revenue Authority, pay the principal tax, and the penalties and interest are waived. So it's important for any of you who perhaps may have unpaid taxes to have a look at that. And the reason why it's so important is because, as you'll see in the next slide, the commissioner's power to waive penalties and interest has been removed. In other words, come 30th of June 2024, when the amnesty comes to an end, if you have any penalties and interest, then there's nothing anybody can do. You have to pay them because the commissioner cannot waive them, neither can the cabinet secretary for the national treasury waive those penalties and interest. So it is so important to take advantage of this window that has been provided. Then sometimes some of you may get assessments from Revenue Authority, and maybe the dispute is around late payment interest. If you have a dispute, that kind of a dispute, you can actually go to the tribunal because that kind of dispute is now covered. Remember, we talked about the e-teams invoices. The provision that supports that is Section 16(1)(c) of the Income Tax Act, and that ties into the commissioner's requirement that you maintain your invoices electronically. And as you'll see somewhere further down the presentation, the KRA has invested heavily in a data warehouse. So they'll be able to see all your transactions. And part of the reason why you've had them saying, we want to access your bank account, we want to access your M-Pesa statements, and so on and so forth, is so that they can have a look at the data and compare with what you are disclosing or what you and I are disclosing for tax purposes. An important one here is the commissioner does have power to actually come and charge your land. If you say, for example, I'm running a school, I don't pay my PAYE or I don't pay my income tax, and the commissioner comes and determines that, yes, indeed, I have a liability, he or she can register a charge against the land or the property, or even the school bus, or any other property that the school has, and tell me to pay the tax. And if I don't pay that tax within 90 days, then they can actually sell the property to recover the tax. It's a very draconian provision. We've not seen it being implemented, but it's there in the law, and it's important for us to understand that. A good one here is that if you've got any tax overpayments, then the commissioner is required to refund it within 6 months, which is quite good. And if they cannot refund it, they allow you to offset it against any future tax liabilities that you may have. That's quite good. If you've got a dispute with Revenue Authority and you submit your objection as is required by law, the commissioner is required to look at that objection. And if he feels that you've not provided all the documentation, then they give you 7 days to provide additional information. Otherwise, your objection will be deemed invalid for tax purposes, which is quite good. Then, if assuming that you have a dispute and you, excuse me, you go to the tax appeals tribunal, and you want to have a discussion with the revenue or with the commissioner, you can actually do that, and you've been given 120 days. Previously, it was 90 days, which was quite short, but now you've got 120 days to try and discuss that with the commissioner and come to an agreement. We call it alternative dispute resolution process, ADR. This is what I was telling you about the data management. The commissioner does have a data, they're calling it a data lake. It's a lot of data that they are collecting, and very soon, when we go into the 3rd generation tax management system, currently we have iTax, which is, iTax would be largely 1st generation. It's not yet gone into 2nd generation, but it's 1st generation. Countries like the UK, Ireland, and so on and so forth have got third generation systems where the Revenue Authority gathers data from third-party sources. So they'll gather data from Safaricom, from your bank, from your customers, from your suppliers, and those kind of things. And then they collect all that data and they complete the return for you, and you only confirm it. So that's the 3rd generation reporting, 3rd generation tax management system that we are going into. And part of that preparation is this data management this data management requirement by the commissioner. And part of the reason why this provision came in is now the commissioner is saying, when you deal with a customer, so for example, when you deal with a parent, I want you to tell me their name. The name of the parent is Robert Wariro. What's his address? His address is PO Box whatever. He lives in Kikuyu. How much is he paying for school fees? He's paying 300,000 in a year. And then now KRA will come to me and say, hey, Robert, how can you be paying 300,000 a year and you're telling us that you only earn 100,000 in a year? That's the kind of move that KRA is going towards. And that's the reason why there's this requirement that, or there's this provision that the commissioner can require you to provide or to take advantage of, to provide this data to the commissioner. And then the tax shortfall penalty remains at twice the amount of tax that has been has not been paid fraudulently. And again, that's the text in blue just shows you the engagements that we had with Revenue Authority and the members of Parliament saying this is very punitive. If you increase it to 75%, if the statement was deliberate, that was quite punitive. So that was dropped in the Finance Act 2023, just for your information. But that was the proposal. So there's a tax shortfall penalty. If you underpay your taxes, the commissioner can actually impose that penalty. If you do not issue an invoice through the electronic tax system, in addition for it not being allowable as an expense to your customer, and this one, your customer here, for example, as a school, I might work for a company that pays my children's school fees. So if my company wants to take a deduction of that, then you need to give them the electronic tax invoice, an electronic tax invoice or eTIMS invoice. Now, if you do not do that, then the penalty is 2 times the tax due on that particular issue. And this one is a lot more for VAT, but because VAT is the one which you charge the VAT on the invoice, but the penalty there is 2 times the tax due. If you look at the finance bill, the penalty was quite high, 1 million or 10 times the tax due. I don't know, 10 times is so high, but anyway, now we've settled on 2 times the tax due, which is not too bad. The one that I was telling you with regard to the amnesty is section 89, 6, 7, and 8 of the Tax Procedures Act. And these are the provisions that allowed a taxpayer to apply for a waiver of the penalty and interest from the commissioner. And the commissioner was 89.6, and then 89.7 and 8 were to the cabinet secretary. And those ones have now been repealed. In other words, they no longer exist in our tax law, meaning the cabinet secretary and the commissioner cannot waive penalties, which is why it's so important for all of us to take advantage of the amnesty. And then the last two are just for your information, that in case KRA comes and audits you and they think that there is a fraud, they can actually mount a criminal prosecution and still try and recover the taxes from you. So which is could be quite punitive as well. So that's a summary of the Tax Procedures Act changes in the Finance Act 2023. We thought it is important to just highlight one slide here for miscellaneous fees and levies, because for schools, based on my experience or based on our experience, you will feel the impact of these changes. And that's because a lot of you will have buildings that you're constructing, classrooms, dormitories, and so on and so forth, laboratories. And you will feel this impact because the minute you use cement is manufactured using clinker. Now, Kenya does not produce enough clinker, so we import. So, and by importing that clinker, it will be subject to this 17.5% duty. We call it export and investment promotion levy. So any clinker that is imported will be subject to 17.5% duty on import. As a result of that, it means that your cement will go up. In fact, if any of you is constructing currently, you will have noted that the cement price has gone from about 580 to roughly now is about 700, 720, depending on where you buy it. So that is part of the impact of the Finance Act 2023. Again, If you're talking about iron and rebars and all those kind of things, again, they will be subject to they're subject to that levy, which makes them a bit more expensive. The same thing with gunias and sacks and bags, they're subject to 10%. You probably, if you craft paper is if you go to a chemist or a pharmacy and you buy medicine, that paper that they put for you, the medicine that the karatasi brown or white that they put for you, your medicine, that's a craft paper. Again, it's subject to this duty, which means it's a bit more expensive. So we thought that this is important for you to understand, especially for those of you who are investing in infrastructure, because it will impact the cost of the investment going forward. Now, having said all that, what are some of the common things that we have seen in this sector and we think that you should be taking care of? The first one is where you have members of staff with their children in the same school, and so they are offered the subsidized school fees. So, for example, the normal school fees is say 60,000 shillings per term, but because I'm a member of staff, my children get to pay say 30,000, half of that. The only reason why I'm getting that benefit is because I'm a member of staff or I'm employed by this school. And so that is a taxable benefit for me. And so KRA expects, and we expect that when we look at your payslip, that benefit will be reflected there and subjected to tax, because anybody else out there is not benefiting from the discount in terms of school fees. And so that is one of the areas that we have seen that people need to take care of. Again, when you've got bomb teachers and or casuals, some people say, well, these ones are not employees and therefore we are not going to tax them. Unfortunately, the Income Tax Act does not define an employee per se. It just defines employment. And so is anybody who you control in terms of their work hours, the duties, and you pay regularly. You pay every month, every 2 weeks, every week. Those ones would be your employees, and therefore you are required to tax them and to also pay the relevant statutory deductions. That means NSSF, NHIF, or now Social Health Insurance Act, affordable housing levy, and all those levies that National Industrial Training Authority, NITA, NITA payments. So you need to do all that. And then now for consultants, contractors, maybe somebody who's doing your electrical works in the school, somebody who is doing your landscaping, or any manner of consulting that you do. When you're paying them, you have to withhold the tax at the appropriate rate. And remember, we said that you have to pay it within 5 working days. Now, for the teachers, especially now that KCPE is out, there are probably some teachers who did very well, and they got some sort of payment for posting very good results. And those kind of payments are again subject to tax, the same way that the remedial payments that, if assuming that there's anybody who is being paid an amount for remedial payment, that one will also be subject to tax on the teacher. So it's important to subject that to tax. And some of you may ask, but how will KRA know? If you're operating through a bank account, KRA will be able to track those transactions very clearly. If you're operating through M-Pesa, remember we said that KRA can now access your M-Pesa transactions following the amendment to the Data Protection Act. So it may not be easy right now for KRA to catch up with you, but in time, they are likely to catch up with you. Now, a very important one here is you are running a school. And so your core business is charging students school fees, and you see whether you're making money or not. And perhaps you're not making money. However, over the weekend, you hire your school bus to take people for a function. You hire to the local church or to the local women's group to take them to a function. That hire of an asset is income which is not school related, and so you are required to account for tax on that separately. We call it separate sourcing. If you're making a loss on the school, but you're hiring the school bus, that hiring of the school bus would be subject to tax on its own, as if it's a separate line of business, or as if it's a separate business. And you cannot say that I made a profit of hiring the bus of 100,000, but I have made a total loss in the school of 300,000. So in total, I have a loss of 200. No, you cannot do that. The law does not allow you to do that. And so you have to account for the tax on that. And so that would be hiring of school buses, school grounds, and those kind of things. Again, if you got interest income in your bank account, that would also be subjected to separately. It will be taxed separately. We call it separate sourcing. Some of you, like if you the school I went to, they had chicken and cows and they planted cabbage and so on and so forth, and they sold these ones to the neighbors. So if you've got those kind of sales, then you have to account for the income on that separately, separate sourcing. Then again, when you send teachers and members of staff on official assignment and you give them a float and they come to account, or you reimburse them, just note that those ones will be subject to tax in some circumstances. So for example, if I give you a float of say 20,000 shillings and then you go to Mombasa for a seminar, but then you account for it after 9 months, the law says that you should be taxed on that float because it's deemed to be a loan, because you stayed with it for longer than 3 months. So it's important that when people go on these trips, they account for their floats as soon as possible so that you avoid that taxation. Again, the reimbursements, if it's beyond 2,000 shillings per night, when you're paying a per diem, that would also be then subject to tax, and that's all provided for in the law. Then the last one, and the one that I really hope that all of you have done, is that first of all, you must file your tax returns because you're a taxpayer, you're a recognized taxpayer. But more importantly is when you build, for example, a classroom, the law does give you what we call a tax allowance. The law recognizes that you've invested, and therefore, when you're determining your taxable income, you are allowed to take a deduction against that taxable income. So, for example, if you've built a classroom, or say, and it cost you 5 million shillings, in year one, you're actually allowed to take, depending on what we are talking about, you're allowed to take anywhere between 10 and 25% deduction in year one. So if for a classroom that cost 5 million, if you take 25%, that's 1.25 million against as an expense against your taxable income. So there are actually opportunities for schools and investors in schools to try and optimize their tax liability by taking advantage of these tax allowances. The same thing with if you bought a school bus, for example, you've built a dormitory or that kind of a thing. There are opportunities to optimize your tax expense, and so we seriously hope, or we sincerely hope that you do take advantage of these allowances because they are provided for in law, and you do file your tax returns. So in case anybody has got any questions, those are my details. I didn't even introduce myself. My name is Robert Warrero. My background is law. I'm a lawyer, I'm an advocate, and I'm also an accountant. I'm a fellow of the Certified Public Accountants of Kenya, and I'm a partner at Ichiban Tax and Business Advisory. And those are my details. In case any of you has got any questions, we'll be very, very happy to answer them. Betty, I can see a few questions in the Q&A, and I'll hand it back to you, and you can guide us how to go about this. Thank you very much.
Okay, thank you so much, Robert. That was quite informative. And of course, to our school director, then we have to realize that also the taxman is really serious, of course, when it comes to revenue collection or tax collection. So on to the next step of our webinar, we want to go straight to Q&A session or question and answer session. And we have, Robert, we have 3 questions on our chat box. Number 1, Nathan Siocha is asking, how is housing levy declared?
Yes, thank you, Betty. Nathan, so what you do, because housing levy is tied to employee taxes, when you're doing your payroll for the month, when you download the Excel worksheet for payroll, it actually has a sheet. I think it's a sheet H. I can't remember very well. It will it will compute for you the housing levy based on the declaration that you have done for basic pay or for gross pay and the number of employees. So it automatically computes for you. And the way it's been, they have updated it so that you can't say that you've got 10 employees for payroll purposes, but then you've got 9 employees for affordable housing. It will not allow you to do that. So it automatically computes, but it's in that one worksheet for payroll. Then now when it comes to payment, you generate 2 different payment slips, one for PAYE, the normal PAYE, then one for the affordable housing levy, even though they go to 2 separate accounts. Betty?
Thank you. Yeah, that's okay. Thank you so much. Hope, Nathan, your question has been answered. We have question 2 from an anonymous attendee who has mentioned that please discuss more on the e-teams with respect to school. 1, should schools get registered on e-teams? And then 2, should schools give fee invoices to parents using e-teams? And 3, should schools have to get supplies from suppliers who have e-teams, including tomato kwa mama mboga? So those are 3 questions from one person in line with e-teams.
Yeah, thanks, Betty, for that. Now, so let's start with the first one. Should schools get registered on e-teams? And the answer to that is yes. And why is it yes? If you look at Section 23A of the Tax Procedures Act, actually it's 23A2, it says a person who carries on business shall A, issue an electronic tax invoice through the system established under subsection 1, and then B is not relevant for our case. So the question here would be, if I'm running a school, am I in business? And the answer is yes. And so for as long as you are carrying on the business of education or providing educational services, then you must be registered on e-teams so that you can issue the e-teams compliant invoice. And I for anybody who is not registered for e-teams, my humble plea is for you to try and register as soon as possible, because remember, this provision is coming into force on 1st January 2024, which means all of us will be running to KRA to try and get registered. And this e-team has a big problem in terms of how to use it. It's not a very easy system. It's not really an easy system. So the earlier you do it, the better. So the second question, should schools give fee invoices to parents using e-teams? Absolutely, because they are required to issue it by law.
Yeah, and there was the last question.
That section that we have just read. And what's important is for people who perhaps apply for reimbursements, or their employers pay for educational benefit for their employees, so they would want an e-teams compliant invoice. Then the third one, kwa mama mboga, unfortunately, that's the provision. You have to, because if you want to take a deduction of that expense, you have no option but to get from mama mboga who is compliant. And actually, if you listen to what KRA has been saying, they say you don't need to buy a device. Come with your laptop, come with your smartphone. We will put for you the e-teams app on your phone. So you actually don't need to invest anything on it. You just need to come with your phone. And so that's the reason why it's going to extend to everybody. Betty?
Okay, thank you so much. Question 3. On casuals who are on part-time basis, should we pay statutory deduction on them? And in so that is in the casual workers probably, and maybe BUG teachers, if I'm not wrong.
Yeah, thanks for that. So the whole idea here is that for as long as you are paying somebody emoluments, whether you're paying them per day, per week, or monthly like normal employees, then you are actually required to deduct the statutory deductions, the first one, and then deduct PAYE as appropriate, because some of them may get to beyond the 24,000 shilling threshold for payment of tax. So for the months that they work. Now, the months that they do not work and you're not paying them, then you don't need to do anything. And again, it's useful to note here that KRA will generally come and ask you for your audited accounts. They will look at your employee costs, then they look at how much you have paid on iTax, and if there's a difference, then that becomes a point of audit or an audit query from Revenue Authority. So yes, for as long as you are actually making a payment to these individuals, then you're required to deduct the PAYE and the statutory deductions, and including by the now this what has replaced NHIF, the Social Health Insurance Act. You will be required to comply with that. Betty?
Okay. There's another question in line with the construction. If building a classroom, I get the funds, pay labor, and buy materials myself. How does this work with e-teams?
Yeah. So so you buy the materials. The first thing is that you're buying the materials. So presumably the hardware guy will give you an e-teams compliant invoice, and you should actually ask for that e-teams compliant invoice so that it becomes a tax, an expense that you can deduct for income tax purposes on your end. When you're paying the labor, now the good thing about this team's provision is that it excludes employment. So it actually excludes employment and what we call imported services, or imported goods for that matter. You don't, because the guy out there in Kenya does not need to comply with this. So the good thing about that is that there is an exemption for employment element. So for labor, that one you're okay. You don't need an e-teams, and nobody needs to give you an e-teams. But for the materials, you definitely would need to get an e-teams compliant invoice. And then once you build that, for as long as you can demonstrate that this is your cost, then you should actually apply to you to get an allowance for that classroom. Betty?
Okay. Another question is from Elijah Wekesa. I think it's the same question that you have answered in line with suppliers. So if I may just read it, he says that assume you are having products from suppliers, e.g. veggies, how am I going to handle that? I guess you have answered that, but would you mind answering it again, probably, Robert?
Absolutely not, Betty, because we are here to exchange ideas. So Elijah, the guy who is supplying you vegetables, or the person who is supplying you vegetables, they have to give you again, they're doing a business, or they're carrying on a business, so they have to give you an e-teams invoice, and if they don't, it's an offense, like we've said. And for you to take a deduction of that expense, you need that e-teams invoice. So in other words, you'll have to go to your farmer and tell them going forward they have to give you a tax compliant invoice. Otherwise, you can still buy from them, but KRA will assume that you never bought anything, even though it's clear that you did buy it. Betty?
Okay, I think that's clear, Elijah. And at how much salary stroke pay is an employee supposed to pay?
Good question. So the threshold for PAYE is 24,000 shillings, and at 24,000 shillings, you pay tax at 10%, which gives you 2,400. The monthly relief for employees in Kenya is 2,400. So at 24,000, your tax liability is zero, because the PAYE computed is 2,400. Your monthly relief is 2,400. So you need to ensure that anybody who is above 24,000 shillings is actually paying PAYE. Betty?
Okay. Another question from Immaculate. Immaculate is asking, since we are supposed to include tax on fee invoices, how are we going to declare it if we don't have VAT obligation? Or how is it supposed to be declared?
That's a fantastic question, Immaculate. Now, whenever we talked about e-teams or teams, the link was with VAT, because it started off with VAT. It actually started off with VAT in 2004 when we had what was called ETRs, and then we progressed in 2020 to Teams, Tax Invoice Management System, for VAT registered persons. Now, today, Teams has now moved. It's no longer just for VAT registered persons. It's for everybody. And that's the reason why even for you guys as school directors and people who are running educational institutions, even though you're not VAT registered, you still have to register for the Teams. That's the reason why the farmer who is supplying vegetables or milk to your school, even though they're not VAT registered, they will still require to register for Teams. So Immaculate, you don't have to have a VAT obligation for you to get onto Teams. In fact, Teams is for all businesses, whether VAT registered or not. Betty?
Okay. So, and Dixon Murage is asking, turnover tax, is it compulsory or say? Okay, let me just. Turnover tax, is it compulsory or someone can choose to pay with ordinary systems?
Okay, so Dixon, turnover tax is elective. You elect to do turnover tax based on your turnover, but you have to communicate that election to the commissioner. So that's the current provision. The draft rules actually say the other way around. They say that if your turnover is below 25 million, we assume that you will pay turnover tax at 3%. But if you do not want to do that, then you opt out. You write to the commissioner and you say, no, my turnover is 20 million, but I don't want to pay turnover tax. I'll do my income less my expenses and pay my tax. So that's the current position. It's not compulsory, but you'll have to be. It's currently it's not compulsory, but going forward, it will under the rules it will be compulsory unless you opt out. And I know the question is coming from the profit probably is not even 3% of the tax that they're asking you to pay. So you are better off doing the income minus expense, particularly if you've got investments like classrooms, like we've discussed. Betty?
Okay, one from Anonymous. In situations where schools invest in fixed deposit and they make loss from school operation, will the income from fixed deposit be taxed separately when paying corporate tax?
Fantastic question. So yes, the answer to that is yes, because interest income is a separate source of income, and that was the decision of the High Court in a case called Mayor Fertilizers versus Commissioner of Domestic Taxes in 2007, where the High Court said that interest is in fact a separate source of income. So where you got interest income, the bank will probably have deducted 15% tax from you, withholding tax, but then you need to declare that interest income, compute 30% tax, but because the bank has paid KRA 15%, you only pay the balance of the 15%. So yes, you would be required to separately source and account for that tax. Betty?
Okay. Henry Kimani is asking, what is the threshold turnover of auditing accounts for SMEs?
That's a good question as well, Henry. So I think the way to answer this is twofold, because some of these organizations or some of these educational institutions may be set up as companies. If you're set up as a company, then you under they call it small companies regime, you can elect not to be subject to an audit. That means that your balance sheet is less than 25 million, and there are certain parameters that you need to meet. So that you can elect not to be audited. But otherwise, as a company, you are required to be audited, and those audited accounts presented to members at a general meeting. Now, if you assuming you're not a company, maybe you own the school as yourself, as Betty, for example. Do you need an audited set of accounts? You're not required by law to have, at least by the Income Tax Act, to have audited accounts. However, if you don't have audited accounts under Section 54 of the Income Tax Act, you are required to issue a certificate confirming the accuracy of those accounts. So you can actually prepare your accounts yourself, but you are required to issue a certificate confirming the accuracy of those accounts, as for example, Henry Kimani. So there's no threshold. I wouldn't say that there's a threshold per se, but it just depends on how you are registered. But probably in the near future, because we had this in the past under iTax, in the near future, you may have a scenario where you're required to indicate your auditor's certification while filing your tax return as a company. So chances are that you will need to do an audit. You need to have audited financial statements for purposes of filing your return in the near future. Currently, that provision is disabled, so you can get away with it. Betty?
Okay, thank you so much. We have another question in line with the social health insurance. Someone is asking if you could probably explain more on the act and include the 2.75%.
Yeah, so now I'll try and explain a bit about this because first of all, that act only became available to the public the day before yesterday. I mean, prior to that, nobody had access to that act. It actually became available to at the government printer yesterday. Now, under that act, what the government is trying to do is to say we want to provide universal health care, or UHC. And the way to do it is to set up three funds. There'll be the primary healthcare fund, there'll be the chronic and diseases healthcare fund, and there's a third fund. The primary healthcare fund is essentially NHIF as we know it today. They will contract with health facilities. They will basically have their members, which is you and I, going to the public health facilities or even to the health facilities which have been contracted, and we get treated without paying anything. And that's the reason why we are paying the contribution. The chronic health fund and the others will be managing those specific aspects. Now, the critical thing here is that everybody, whether you are employed, you're in business, whether you are in prison, whether you don't have any money, you are what they call indigent, all of us will have to be contributing. And the contribution ratios are different. For people who are in business, you'll be paying the contribution once a year. For people who are in employment, it will be removed from your payroll or from your payslip every month. Now, the critical issue that we have not yet been able to define right now is how much contribution that will be. If you remember the NHIF draft regulations in May, they had proposed 2.75% for NHIF, but of course that one did not go through. And they started talking about the Universal Healthcare and the Social Health Insurance Act, which is now what has come into place. So that act also does not define what people will be contributing. The contributions will be determined by regulations, and those are the regulations that we expect next week. But based on our conversations with our contacts there, we expect that amount will be 2.75% of your gross pay. In other words, you've got 30% tax, you've got 1.5% affordable housing levy, and now you'll have 2.75% Social Health Insurance Act levy, which you must pay, by the way. Because if you do not pay it, then again you can't access all these things. So that's how the act is defined, and that really is the intention of the law. But like I said, Betty, this only became available yesterday, actually about yesterday afternoon. So we've not had too much time to look at what the law says, but we will definitely keep people updated as we go along. Betty?
Absolutely. We'd really love to be updated and also update our school owners. One last question from my chat box is that if I'm starting a school today, what are the key things I need to put in place with regards to these taxes?
Okay, that's a good question as well. Quite broad though. I think the first thing that I would say is determine how you want to register the school. Do you want to register it as a company, or do you want to register it as a business name, and therefore you are the one who owns it? So that's the first one, because then that determines the kind of taxes that you will be paying, whether you'll be paying corporate tax or whether you'll be paying PAYE. And the reason why I'm saying corporate tax or PAYE is because depending on your income, PAYE could go as high as 35%. However, corporate tax is currently 30%. There's a proposal to bring it down to 25%, I think in 2025. So, you've got to determine that. Then it's just not about the tax. Remember, we said a company needs to be audited. Or at least you need audited accounts even for your financials, for ed partners and so on and so forth. So you may need to also think about that. Now, once you've determined the choice of entity, you then say the infrastructure I'm building is XYZ. What are the tax advantages or the tax breaks? If I build a classroom, this is what I am expected to get as a tax break. And if you ask me as a tax practitioner, I've done tax for about 20 years. If you ask me, it actually makes a lot of sense to comply with your tax obligations, because compliance, even though it's expensive, is slightly cheaper than non-compliance, because if KRA catches up with you, then the penalties are crazy. So I would say, once you've determined the choice of entity, look at the tax breaks, maximize those tax breaks, and plan your tax breaks such that you can avoid paying taxes for as long as possible. For example, you don't have to build all the 8 classrooms at a go. You could probably build as you go along, so that every year you have some capital allowance that you are claiming, and then just get somebody who can help you in terms of complying on a day-to-day basis whenever you're paying your withholding tax, whenever you're filing your tax returns, so that you are compliant. So those are some of the things that I would say an investor would need to think about. Betty?
Okay. I think that's all from my chat box. I'll also give a chance or an opportunity for anyone who just want to unmute and ask question before we end our webinar for today. However, I want to let you know that the recordings for this webinar, together with the slides or the presentation that you've had today, will be shared with you via your emails and even through our relationship managers. So you can always have access to the same in our YouTube channel, and also via your emails. I'll be sharing to all our school owners via email and also through our relationship managers. So above all, we also have Robert Wariru's contacts on the screen. If you want to engage him on further consultancy in regards to tax and issues to do with advisory for your school business related to tax, then he's very open to just guide you as a school owner and even as you continue running your school. If you can't access his contact, you can always access him through us at Partners Africa. We have our contacts in our social media pages and our website, and even through our various branches where we have our presence in, and also through our RM. So we are very open as at Partners to support you and to continue working with you this journey in ensuring that you are operating your school in line with what normal regulatory requirements, and you are also compliant to what the taxman, of course, wants. Before we just end, I've received another question in my chat box, Robert. This question is in regards to how will I treat an SSF contribution assuming employee earns 10,000 shillings for the purpose of taxation, please? So before you just end, maybe we can answer that one last question.
Yeah, and thanks, Betty, for that. So NSSF is a pension contribution that both the employer and employee are required to make. So NSSF has got graduated bands, and it goes all the way. You contribute, I think, a minimum of 300 shillings to a maximum of 1,700. Sorry, that's NHIF. So NSSF, so that's NHIF. NSSF is it goes to a maximum of 1080 for the employee and 1080 for the employer. So a total of 2160 per month. So for the person who asked this question, you would need to look at if I'm earning 10,000 shillings, what is my contribution per the bands, and the NSSF has got the bands. I don't have the band for the 10,000 shilling right now, but we can look at that. So that band is what you contribute, and then as an employee, and then the employer will have a matching element, which all go to NSSF. And the critical thing there to note is that if you don't remit the NSSF on time, there are significant penalties as well. It looks like everybody is imposing penalties for late payment of these amounts. So there's a significant penalty on late contribution, but we can check for 10,000 shillings how much NSSF would be on that. Betty?
Yeah. So thank you so much. Anyone who might be having a question and you want to ask before we end our session for today? Okay, then I'll just let you know that we shall be having part 2 of the same on matters to do with regulation, of course, in line with Kenya Revenue Authority, and also we shall be having the same session on December 8th. I'll share a communication in regards to that and a link for the next webinar. So if you don't have an opportunity to ask a question right now, you can always, of course, ask during our next session. Otherwise, I want to say thank you so much for availing yourself to our today's webinar. We are still open for consultancy or even any further question or any clarification. And just to let you know that this webinar was being recorded and the same will be shared into our YouTube page for your ease of access and also for sharing with other stakeholders within the education community. One last one that is coming, Wariro, seems every time we want to end, a question comes, or from Jackson Machuka. Jackson is asking, is the house levy mandatory for salary below 23,000?
Very good question, Jackson. Yes. So even if a guy earns 1,000 shillings, you deduct 1.5%. So housing, affordable housing levy is mandatory.
Okay. Another one has just come in right now. Again, on statutory deductions for part-time casual who don't work throughout, how do I pay NSSF for January, then Feb, I'm not? Don't know whether that question is clear.
Yes, I think I've understood it. So because they are part-time casuals, so you pay them in this month and then the following month you don't pay them. So that's
Yes.
fine. So the month that you don't pay them, then you'd file basically new return, or they'd not even feature in your payroll list because you're not even paying them anyway. So there you have no obligation for PAYE and also for NSSF and social housing, social health insurance act. So yes, the month in which you're paying the casual is when you pay. The following month, when you don't have any payment for that casual, it doesn't feature in that list, and therefore there's nothing to pay for him.
Okay.
Or her.
Yeah. Okay. Thank you so much. I guess we don't have any questions for now, but we'll have a part 2 of the same or series 2 of the same. So let's meet in our next series. For now, it's a goodbye and thank you once again for attending. Thank you so much, Mr. Robert Wariro. See you next time.
Thank you very much, and good day, and have a good weekend, everyone.
Thank you.